This program is brought to you by Real Estimate. Get a free real estimate of your home's value today on the realestate.com.au app.
It is great to have your company here on Business Now. Well, let's take you around the weekend property markets. And PropTrack says there were 1,424 auctions with a 61.2% clearance rate. Now, just out of interest, I went back to the same weekend last year where there were more than 1,500 auctions and a clearance rate of 66.3%. So you can tell the market right now is softer. In Sydney, 515 auctions, 60% of those were sold. In Melbourne, 471 auctions, 69% sold, so just a little stronger there. In Brisbane, 130 auctions, just under 51% of those cleared. In Adelaide, 64 auctions, but look, it is still the best property market in Australia. 76.6% of those were sold. In Canberra, 48 auctions, close to 2/3 of those were sold. So across the nation, it was pretty strong. Anyway, let's get now to what's taking place in the markets for the first time in 2025. Paul Ryan, Senior Economist with REA Group, formerly with the Reserve Bank. Paul, thanks for your time. Before we start, do you want to hazard a guess on the Reserve Bank next Tuesday?
I think I've got to go with everyone's expectations for a cut in February. Really, I think it's just a matter of time before we get that first interest rate cut. The big question will be just how much does the RBA envisage interest rates need to come down to bring the economy kind of back into balance? People are kind of at the moment expecting 3 or 4 cuts this year. I think that's going to be the next big question after February's meeting.
And what's your own sense? Because the other problem is you don't want to actually add to inflation and have to suddenly turn this policy on its head at some stage in the future. You prefer to see interest rates stay on hold for a very long period of time, I would have thought.
Yeah, my expectation is that the RBA will decrease rates at a slow pace. So we're probably likely to see probably closer to 3 rate cuts this year. That gets the economy back to the position where at the moment the RBA thinks is about back in balance. The RBA really, the reason they've been so late to cut rates compared with other parts of the world is that they really don't think that the interest rate settings at the moment are that restrictive, which is interesting given how much the economy has slowed throughout 2024. And we saw recent inflation data back that up with a lower read than most were expecting.
Okay, so we see from your property price index each month that prices are also starting to soften, particularly in Melbourne. Now, is it enough right now, 1, 2 interest rate cuts to actually get those property markets, the housing markets, to start to rebound?
It's an interesting question. It will help. It'll boost borrowing capacities. I think the buyers that are doing it most tough across the country are first home buyers, and any interest rate cut will help them the most. It'll continue that increase in investor interest that we've seen throughout 2024. So it will make a difference. We are expecting over 2025 to see home price growth, but at a more moderate pace than we saw throughout 2024. So at the moment, we're expecting this to be a bit of a lull before the market starts to get back to growth, probably towards the middle of the year, and that will be partly related to interest rate cuts.
Okay, so the price of money is one thing, but then the other thing that would actually help the price of housing and affordability of housing is more building. But that really is pretty patchy, isn't it?
At the moment, yeah, we're starting to see some green shoots. We've seen building approvals pick up from what were very low lows, and we're hoping that trend continues. The stability is really, really important for the building sector. It's important for buyers who are considering buying new homes, and we've gone past those points where housing construction costs were increasing rapidly, builders were going broke at a rapid pace, and we're back to really stable conditions. We saw some construction costs fall, which is actually an unexpected bonus for the construction industry. And if those trends kind of continue, we're expecting the building construction industry to recover throughout 2025. And more home price growth will only help that because it'll make new construction compare more favourably to existing homes.
I'll tell you what, Paul Ryan, always great to chat to you, and many thanks for your time today.
Thanks very much, Ross.